Welcome back. This is the fifth video and it might be the most important one for protecting your account. Now last time I gave you the two different setups and everything that goes inside of them. We talked about the slingshot squeeze and the squeeze signal, the trend stack, things like the close above the 34, the turn, the confirmation, momentum switching, all of that good stuff. Now today, I want to share why all of that matters by showing you what a squeeze is without any of these filters, a bare squeeze. And what I'm hoping you learn through this is by seeing the data instead of risking real money, you understand the importance of having these particular triggers. That's because a bear squeeze by itself through all of our research, and we've tested this over 22 years across hundreds of stocks, that bear squeeze has no edge. Just buying a dot lit up won about 54% of the time, which sounds fine until you realize that buying a stock on any random day won about the same number of times. So the dot itself doesn't really tip the odds at all. All it's doing is it's telling you that energy is stored, which we've already covered, but it doesn't tell you the direction. Now, on its own, after you incorporate things like commission, slippage, this really is a coin flip that you slowly start to lose, especially if you're trading with options. Now, before you ask, yes, we also tested the popular shortcuts that I think you've heard as common nomenclature. Things like, oh, we're going to wait for 5 dots to stack up before we buy. Does the win rate improve there? No, it stays about 54%, roughly the same as what we saw before. What about buying after the squeeze actually fires, that first green dot? That actually has a slightly higher win rate at about 55%, but still a coin flip. And buying the pullback, which is one of the most common pieces of advice, waiting for price to dip back to maybe the 34 or the 50 while it's still squeezing, that one actually did worse, around a 45% win rate. You're actually catching this falling knife while the entire price action is giving you clear signs of compressing. So where does the edge come from? Well, it comes from being picky about which squeezes you take and which squeezes you skip. Let me take it to 3 things, one at a time. The first is that momentum turn concept. We don't take any squeezes, we focus on where that momentum is starting to curl our way. We already talked about the turn. We then talked about how the turn sets up way for the squeeze signal. So we have a 1-2 punch, if you will, for 2 different ways to profit from a squeeze. Now, number 2, trend. We demand that the full EMA stack is there, so we're trading compression in the direction of the market and in the direction it's already leaning as opposed to fighting it. And finally, 3, we have confirmation. We look for this confirmation to make sure that that real momentum is actually there behind the move and baked into each and every single row that we see with the trigger on our scanner. Now here's the payoff. If you stack those 3 on top of this bare bone squeeze, which we saw had that win rate somewhere between 52-55% if you waited for the squeeze to fire. If you stack these filters on top, then those same squeezes won about 2 out of 3 times instead. So roughly 68% over the same 22 years. So we're looking at the same exact data, same sample size, same period, but you can see how just adding some simple filters helps take this otherwise thing that gives you a coin flip edge into something that actually helps you grow your account. So let's bring everything together. The squeeze is necessary, but it's nowhere near sufficient by itself. A bear squeeze, we learned, has little to no edge. On some stocks you might find it, but for the broader market on general, the squeeze just gives you an idea of where you want to focus. It gives you an idea of where this energy is compressing. With that, we digest that information and we start to filter down to the squeezes that we actually want to participate in. That's why when we do see the slingshot squeeze with a squeeze signal arrow, that's something worth paying attention to because that's now taking a bunch of different factors, doing all of that filtering, and showing you just a bear squeeze is worth trading. Now in the next video, I'll show you how the platform stacks all of this for you, ranking every single setup by its trigger and how many time frames are squeezing together and what is the 22-year backtest of that own ticker so you know where this signal tends to work versus, again, which setups you'd like to skip. See you in the next video.